All right, well, greetings, traders. Welcome to followmetrades.com live trading room special session here for the FOMC minutes release, which will be happening in about 30 minutes. So glad to have everybody here, and welcome. I know we got several guests here. I issued a an invitation to lots of people to come check it out, come sit in, and I'm really glad you're here. If you are a guest, make sure you can find the chat box. You notice there's a control panel for the Zoom webinar platform, and there's a chat feature, there's a raise your hand feature. Make sure you can locate that and test it out. Go ahead and type in where you're calling in from, what city, what state, or even what country if you're not in the US. It'd be great to see where everybody's calling in from. It's always fun. Typically, you get quite a geographic dispersion. Hey, Debbie's calling in from Alberta, Canada. Bob from Tulsa, living on Tulsa time. Warsaw, Poland. No way. Awesome. Windsor, Connecticut. Thanks, Jack. Good to have you here. Florida Marine. Austin. Michael's in Hong Kong. Mountain House, California. The other Dean J, right down the road. I'm calling in. I'm just south of Seattle. I'm about an hour south in Olympia, Washington. It's getting a little bit cool here. It's a nice day, but cooler than it has been. Had a caller in the trading room this morning from Minnesota, and he said it's getting cold in Minnesota. Ottawa, Michael. Is Ottawa? I just saw an article. You know, the legalization of cannabis is rolling out. I think it was Ottawa was the province that still hadn't got it all worked out, and they said that was odd because they had the highest per capita usage. Hey, Miles, welcome, Rebecca, Fort Knox, New York. Glad to have you here, Rebecca. All right, so let's kick this thing off. Quick disclaimer. Yeah, I'm a trader. I'm not a financial advisor. And so I'm going to be looking at the live markets, offering my opinion. I'll share some trades that I'm in, some trades that I like, the setups that I'm using. But whether anybody decides to participate in the market in any way, that's strictly the decision of each individual. Only you know what's appropriate for you, for your account size, for your tolerance for risk, and all the other factors. You know, it's real money. So I share what I'm doing. Each person makes their own decisions about what they're going to do with their money. I'm not giving financial advice. I share what I do. But everything is for education and information. All right. And Michael says probably BC has the highest per capita cannabis usage in Canada, like the west coast of the U.S. Could be. Yeah, it was kind of a funny article. Certainly been a volatile market. We've had a couple cannabis-related trades over the last couple months, and we did really, really well on them. It got a little crazy, so we're standing back on the cannabis trades just now. But we traded Kronos, Canopy, and GWPH, I believe, was the other one. Did well. Got winners on all of them. All right, so. I know many of you are guests, and again, welcome. Glad to have you here. And if you don't know me, hey, I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been investing and trading for over 20 years. And I really got started when I went to work for Intel Corporation in the early 90s, and part of the compensation package was employee stock purchase and incentive options. And if you remember back then, if you were following the markets, Intel doubled and split like clockwork for about the first almost 10 years I worked there. And I began to see the power of, wow, you can make a lot of money in the market. And it was awesome. So I got interested, started trading other stocks through the dot-com rise and dot-com bust. During that time, I got an MBA from the University of Washington. And for many years, I was a fundamental trader studying earnings statements and balance sheets and fundamentals, and that's a lot of work to do a thorough analysis on a company and end up getting mixed results on that. It was super frustrating. I totally gave up on the market for a while in 2007. Got really lucky, missed the crash. I was in cash on the sideline just trying to figure out what to do. And then I got big. I just couldn't stay out. After 2009, I got back in, got into some good trades, bought Bank of America at $5. It went to $12. But I was still stressed out because I didn't have a trading plan. And so I got interested in technical trading about 8 years ago in 2010, made a lot of mistakes, went down a lot of wrong paths, bought a lot of tricky indicators, and, like most people. 2012, I got settled in on the system that I'm using now. And so that's been about 6 years, and I started getting consistent profits. And in 2015, I launched Follow Me Trades, the company that I'm running now. So I have a stock pick advisory service, trading room, and some education courses. So that's just who I am, what I got going on. And this is the best job I ever had. This is fun. I just really enjoy trading the markets and talking with other traders and helping people reach their financial goals via trading. Pretty good stuff. So here's what we're going to do in this session. I'll show you. I got a specific setup. It's really an intraday setup for trading big news like the FOMC announcement. So I'll show you what that setup looks like. We're going to watch the market reaction to the FOMC announcement. Typically, there's a pretty good reaction regardless of what they do. We'll look for any intraday trade setups. I'll demonstrate that trade if the setups there may or may not be. And then we'll discuss trade setups on the larger time frames. I rarely day trade intraday, but if there's a great setup, I'll take it. But I don't spend all day staring at the computer screen looking for intraday setups. I typically trade larger time frames. And we'll look at some trade setups on some larger time frames. I'll show you some trades that I like. We'll see if we can find a few more. And you'll leave today with a couple trade ideas, I'm pretty sure. And I'd be happy to look around, take a look at any charts you're interested in, offer my opinion, run it through my analysis techniques. So if you want to stick around and see that at the end, I'll be doing that. Michael says, supposedly some shorting brewing for cannabis. Wouldn't be surprised. It's very volatile right now in the cannabis sector, that's for sure. All right, so that's what we're going to be doing today. Let's talk about the current situation, expectations for the Fed announcement, which is going to be coming out here in about 23 minutes. So let's do a quick poll. This will be fun. I want to see what you guys think. So the expectation right now is that the Fed's going to raise rates by 1/4 point to 2 1/4. What do you think they're going to do? Let me launch this question, and you should be able to see it. So let me know, see if the votes start coming out. I think you guys will see it. There you go. So the question, hey, the Fed's expected to raise rates 1/4 point to 2 1/4. What do you think they're going to do? They're going to do the 1/4 point. They're going to do 1/2 point. They're going to keep things the same, keep it flat, or maybe got no idea. That's a legitimate answer, right? Looks like people are voting. Got about half the people who are in here have voted already. So I'll give it a little more time, and then I'll show the results. Pretty fun tool here with Zoom. You can do a live poll and show the results. And it looks like the votes are still coming in. And it looks like a few people are still logging in, so welcome. Glad to have you here. We're just getting kicked off. I'm just doing a little poll, see what people think is going to happen with the FOMC, which is the Federal Open Market Committee. So it looks like a few answers are still trickling in. We got about 2/3 of the people in this session here have voted, so that is cool. And it is tapering off. So I'll go ahead and end the poll and we'll show the results. So you guys should be able to see that. So huge consensus, 77%. Say 1/4 point, which is the expectation. You got 3 people saying a little bit larger increase, 1/2 point. A couple people think they'll keep it the same, and a couple people have no idea. That's all right. So I'm going to stop that, and I'm going to do another poll. So regardless of what you think they're going to do, how do you think the market's going to react? And we launch this one. So whatever you think the Fed's going to do, how do you think the market's going to react? It's going to go up, it's going to go down, it's going to stay flat, flat, less than 1% move. And I have no idea. And people are voting again. Thanks for playing. Oh, we got two answers, neck and neck. And we've got almost the same number of people voting that did last time. We'll give it a few more minutes. So if you got an opinion, click the button. Okay, looks like it's we're done, so I'll end that and I'll share the results. So we certainly have a bearish slant to things. If you look at the distribution, 3 people say the market will go up. 10 people, 37% say it's going to go down, and just under that, 33%, 9 people say it's going to stay flat, and a couple people, I have no idea. So definitely, the distribution is skewed toward bearish to flat, with the bears leading by a couple votes. That's fun. Again, thanks for weighing in with your opinion. All right, let me make sure I'm sharing my screen. All right. Get everything set back up here. All right, so let me talk about my market, my trade the news setup. So typically when there is big, there is a big announcement, big news, new information entering the market, quite often there's a reaction. Now, if it's what's expected, if the Fed says, yeah, quarter point, then that won't probably cause a big reaction in the market. And then, half hour later, they're going to issue they're going to have their press release and they're going to give their forward-looking comments, and that may have a reaction, a secondary reaction. I know there's talk about them removing the accommodative words from their policy position. We'll see how that all plays out. Pretty interesting. Lezek, I hope I'm saying your name right. What are my predictions? I think they will do the quarter point, and I think the reaction will be flat, and there may be a reaction later based on their comments. Their forward-looking expectations, their what they think they're going to do in the future, and how accommodative or not they want to be, what they're worried about. So, I think they're going to do what's expected. I think there won't be much of a reaction, but it's kind of like fishing. You got to show up. You got to show up and get a hook in the water if you expect to catch anything. So if something unexpected happens, we may get something, may get a reaction and something tradable. And Michael Lee, I think you're right. The quarter point is already priced into the market. So I'd say do something different, new information, and the market will react to that. So if we get new information, something surprising, here's the setup I look for. I look for an initial move. This is on a very short time frame chart. This is a 2-minute chart, so it takes a little time, but there's typically an initial, impulsive move, and then after that move, there's a retracement, and I look for retracement to a Fibonacci level. I like it to retrace between 38.2 and 61.8, and then after that retracement, so you get a big initial move, get a retracement, then we look for a continuation of that original trend, and it can quite often go quite a long ways. So you can see after the retracement, there's a low, lower high, new low. That's an aggressive entry, and then there's a pretty conservative entry here. So that's the move we look for, and it's just the opposite on a long setup. So you get a big initial move, you get a retracement into a Fibonacci retracement zone, and then you get, you know, high, higher low, new high, and a continuation of follow through of that original move. So that's the news setup, whether it's, you know, an oil report or a big economic report or, you know, the Fed announcement. Quite often we see these. I know on this is on gold. It can be on the S&P 500, you know, the indexes, stuff like that. So let me see. Boy, Richard's got a long comment here. Let me see if I can pull it out of here. Yeah, I think I read similar articles. So ultimately, everybody's got an opinion. What matters is what actually happens. And I think that, you know, that's what I teach when relative to trading. We can all have expectations about what the Fed's going to do in this case, how the market's going to react. It's important to, it's fine to develop, you know, theories, but it's important to only take action based on reality about what's actually happened. And sometimes it can be counter to what we think should happen, and that can cause some stress and confusion. And as a trader, we want to, you know, kind of work through that and have a well-defined trading system so that we can simply trade the realities of what actually is happening. Here's the S&P 500 E-mini futures. Here's a 10-minute chart. That's too long a time frame to trade intraday, but it's a pretty good picture of what the trend is. And you can see since today's open, this dashed line here, it's meandering. A little high, a little low, failed a high there, put in a low, now it's put in a high. So it's really just in a channel that's widening. And of course, the market is waiting for the new information. It's waiting for the new information from the FOMC announcement, which is going to be coming out here in about 13 minutes. All right. Well, there's a good question. If the retracement is greater than 61.8, what does that mean? It means that the pattern may not be working. The max retracement, and I got something in the way here, 76.4. If it goes beyond 76.4, then it is no longer a correction to the original trend. It is a new impulsive move. If it goes a little below 61.8, it's okay, but if it goes below 76.4, then all bets are off. It's not the pattern we're looking for. Here you can see this line is 76.4. So if this had gone up above this line, that's not a correction to this move. That is a new impulsive move. And then you're looking for a correction to that. So does that help, Jeff? Great. Glad to hear that. Looks like a few more folks have logged in. Welcome. Glad to have you here. So we got 12 minutes until the announcement. I've been watching gold for weeks, waiting for a breakout, and boy, it gets close and then it fails, and then it gets close and then it fails. I'll show you this on a 60-minute chart. This is a good example of waiting for the reality to prove itself. It's pretty dense here, but I'm showing quite a bit of data. So gold, of course, most of the year has been in an incredible down move. We saw this move up, and this is actually the beginning of an uptrend, but we don't want to be faked out just by a first move. So here's the first move up, and then a nice pullback. And what I'm waiting for, what I want to see is gold break this level here. And that would be a really, really strong indication of an uptrend beginning. There's a pattern I'm looking for it's called Dow theory. I'll bring a pen up here and draw it. We got a little time. I want to see a high and a higher low and then a new high. That would be a pretty strong indication that a significant uptrend is beginning on gold. And you can see it failed here and it failed here. There was a couple fake outs. So like here it goes. It's going to happen. No. Here it goes. No. And this is a great example of having to wait for the realities. I think gold's going to go up. That's my theory. but I got to have it proven. I got to be able to disconnect what I think should happen with what is actually happening, and a move up on gold has not been proven. So we ain't trading it yet. We may never trade it if it doesn't prove it. So there we are. It is a bit of a wedge. It's not a classic pennant or wedge, but it, you can see it is in a bit of one, at least here. I'm not sure if this is where you're looking at it, but a bit of a wedge forming, and then the swings narrowing there. SP says, hey, what are those triangles? Those are pyramid trading points. It's an indicator from traderscoach.com. Pretty helpful indicator. Indicates entry points and stop points. Yeah, I talked about higher highs, higher lows. You can see these pyramids are formed for higher high, higher low, new high price action sequences. James says, look at platinum, maybe ahead of gold. Actually, silver may have a bigger profit potential than gold. What am I doing here? That. These charts back right. This is my intraday view. I've got S&P 500 on the right, gold in the middle, oil on the left. Pretty broad section of the market to keep an eye on. I like it. Okay, 9 minutes. I don't want to lose track of the main objective here, which is the FOMC announcement. Okay. James says, hey, there's a platinum ETF here, PPLT. So that's interesting. And platinum's kind of doing the same thing as gold. It's got this move up. It's got a pullback. If we can see a new high, let the pullback finish and then take a new high above here, that could be good. That could be really good. Just for fun, let's look at silver compared to gold. I think the futures contract's SI, if I recall. Yeah. And silver's kind of lagging, but man, it has been beaten down. And there may be a bigger profit move here if silver takes off. Michael says, yeah, it's all-time low to gold ratio. It's definitely at here's a weekly chart, and you can see with a high of gold back in 2011, 51.97, call it 52 bucks for the futures, sitting down here at 14. That's a massive decline, isn't it? A lot of people, when I talk about gold and silver, they think there's a correlation and that maybe crypto is taken over and is causing people to move out of precious metals. And I don't know. Here's the Bitcoin futures. Boy, this has found a bottom. It may take off. There's no proof of it taking off yet, but for now, it is at a hard bottom, 65.30. The bottom of the Ichimoku cloud, 5,900 is the floor of here. Yeah, when we trade gold, I do use different instruments, Guillermo. I don't actually trade the futures on gold. So we typically use an ETF. GLD is a great one. The gold miners is a good one, GDX. And a couple you've typed in there are good ones as well. There's individuals. We've traded MUX, Vail, which isn't gold. It's mining, a lot of different mining. I avoid the leveraged ETFs. Those are okay intraday trading, but I don't think it. I think there's some risk in holding some of the leveraged ETFs, 2x, 3x overnight. They can move pretty dramatically. And also, you have to really dig into their statements about how they roll futures contracts and just how they settle, and there can be some tricky things there. So I just avoid the leveraged. You can get plenty of profit out of the straight ones. There you go, James. All right, 5 minutes. Guillermo, which ones are leveraged? Let me pull up, I think like JNUG, it'll be in the name. It's not a mystery. Here it says, so JNUG is the DX Junior Gold Miners Bull 3X. So that is a leveraged ETF. Right there in the name, 3 times. They can move dramatically for you or against you. Dust is a gold miners 3X. Great resource. If these are all ETFs, if you're interested, there's a great resource, and it's called ETF Database. ETFDB is the website, and they can give you all kinds of information about is it? No. This is it. ETFDB. This is a great source for if you want to find out information about ETFs, look for particular ETFs. This is a great tool, etfdb.com. You're welcome. Hey, it looks like more folks have joined. Welcome, glad to have you here. We are 3 minutes out from the announcement from the FOMC. That's not the one I want. I just got an alert. We were watching IWM, which is the Russell ETF. And I just got an alert not too long ago. We were looking for it to break this low. And there's a chance that the Russell is heading down. This is early. It's a pretty aggressive entry, but we got a nice, after, big run up like the rest of the indexes, we got a nice pattern here of low, lower high, new low, kind of short term, but we're thinking it could break through. This is the Ichimoku cloud here. This is the 200-day moving average. There's a chance it could retrace at least down to the 200. That would be a pretty nice trade. Yeah, no worries, Lizek. It's a TradeStation. I use TradeStation both for my charting platform and my primary trading account. I've also got an account at Charles Schwab, but TradeStation is the main thing. Hi, you're very welcome. Guillermo, let's hold because before we go look at another one, because we got the report coming out here in less than 2 minutes. We want to keep our eye on the ball here. Oil typically does not react to the FOMC, but gold and S&P 500 can. These 2 top charts here are 10 minutes. These are very short intraday range charts down the bottom that will show moves pretty dramatically. So that's what we're watching. So the countdown is beginning. So I bet some of you are glued to news feeds. I got Forex Factory, which is a pretty good source. Even if you don't trade Forex, they got a nice news feed here for market-related stuff. So we'll look at that. But if you have a great news source, once the report drops, I'm going to be watching the charts. But if you get a great quote from a news story about what they're saying, put it in there. Go ahead and put it in the chat. Let us know. We kind of fun. Sometimes these moves happen like to the second, right? You can, like particularly when the oil report comes out, most times there's a pretty dramatic response instantly. There's thousands of traders glued to their screens and glued to the news and acting based on it. And they got orders already teed up. People pushing the button the minute it happens. Here we are, 3, 2, 1. Dud. That's so far. Oh, wait. Getting a little action on the S&P and on gold. Miles says quarter point. Jeff also. So as expected, quarter point, right? New language. Did they drop accommodative? That was the expectation. Got pretty good reaction out of gold. Not really big enough to call an impulsive move, though. Miles says, yeah, accommodatives out, predicting a December raise, further gradual hikes with expansion. Wow, look at that. Forex Factory, they're probably getting overwhelmed right now. I'm probably not the only guy looking at their data. Or trying to look at their data. 3 hikes in 19. So that would, if we got one more this year, that would take us to 2.5. If they're all quarter point moves, that would take us to what? 3.25. Still pretty good. There goes the S&P. Now it's starting to move. Gold's going the same direction. So I think we can call this an impulsive move on gold. Let's dial this down to about a 2-minute. Oops, wrong chart. Actually, we can use the range chart too. So here's the move really from when the news hit. It's to here. It's not that big, but it's so if we get this retracement, now if it keeps going from here, we'll have to adjust these fib lines. But if we get down into this retracement zone and then it reverses, there could be a long coming on S&P. Wow. I think we could call that an impulsive move on gold now. That's a big move. It's still underwater from yesterday's close. You know, it's big relative to the price action earlier today. Percentage-wise, it's not that special. Just want to see if it's going to retrace now or continue up. Watching this bottom right chart. So the move on gold from the time of the report here, 1198 peak, 1204, about a 6-point move. Not that impressive. Even the S&P move wasn't that dramatic. So kind of a dud. I don't think trying to trade the news response at this point. I don't think it's going to happen. But like I say, you got, you want to catch fish, you got to show up and get a hook in the water. Doesn't mean you will, but we were here, we were ready. That doesn't mean the end of the world. Oh, we're getting a little retracement on S&P. There's still plenty of good trades out there. Interesting, S&P's up, but I like this. IWM short. It's aggressive. It's really trying to catch an early entry here, and we just might be doing that in my trading room. Here's one. Speaking of the trading room, we took a short this morning on CenturyLink. This one was really clear, and it's already in a little bit of profit. This is a short trade, so I use a combination, a very simple approach to Elliott wave. I just look for a dramatic price move. Well, there it was, right? CenturyLink from $33 down to $13. That's dramatic. And then a retracement into a Fibonacci zone. There it was. And then a continuation of that original downtrend. And we see really clear evidence of that happening now with a low, lower high, new low. Price broke the Ichimoku cloud, negative momentum. So we see pretty clear evidence that this original downtrend is going to resume. We took a short here right as it broke under the Ichimoku cloud. And that is a trade that if you're interested, again, I'm not, I'm sharing what I'm doing. Each person has to make their own decisions about what trades they take, but this one for me still has a good entry. Our target is 1803 for this current leg. It's a swing trade. Current stop, 2193. I know not everybody likes to use stop orders. That's fine. That's really defined as an exit point. If it goes up to 2193, then I would exit the trade by whatever means individuals are comfortable with. But I would get out because that means that this thesis about this downtrend has failed. And if you look here, I always look for a good reward to risk ratio on a trade. So our entry on this was 2071. Our stop is 2193. Target is 1803. And you can see the distance. We can just visually check our reward to risk ratio. This distance is much smaller than this distance. This is 2 or 3 to 1. So the potential profit, if I'm right, is much bigger than the potential loss if I'm wrong, if I do get out of the stop. That's good math. We did trigger another trade right as the trading room ended that we had on the watch list, and this is another potential good trade. This is a Cooper Tire and Rubber. So here's the impulsive move down. Here's the correction. It just put in a new low, so I really like a short, and it's a good early entry short on Cooper Tire and Rubber, and so I think we'll be publishing that one to my subscribers here very, very shortly. And again, we may be taking that short on the Russell ETF, IWM. That one's a little aggressive. This Cooper and the CenturyLink, pretty highly probable, well-qualified trades. IWM, a little more aggressive. We're trying to catch an early entry on this, but it may pay off. It may absolutely pay off. Michael's got a couple symbols. I don't know if I can do all those for you, Michael. We'll be here the rest of the day. You want to pick a couple you're interested in? A couple of the top ones there that you like. And meanwhile, I think Guillermo, you said you had one you wanted to look at. Anybody else? Guillermo, BX. Blackstone. So this is an interesting chart. So this is, it's in an uptrend. Any surprise there? Over the last 2 years, it's been in an uptrend. Now, last few price bars are down, but that does not confirm an end to the uptrend. It happened back here, happened here, right? But it goes on to make new highs. What you look for is that pattern that I showed. So I wouldn't trade this long. It's a very mature trend over 2 years. Could it continue up? Sure it could. Will it? No, it's running out of steam. I would look for this low, then a lower high, maybe a run up, but stay below that, and then the next low. And as it does that, it may be breaking through the cloud here and at least getting some profit down to the 200, maybe even lower. So I would look for that before I tried to trade it, a low, lower high, new low. Then it might be something interesting. Is there a difference in confidence if it closes in the cloud versus on the other side? Yeah, there is. There is. But sometimes by the time it closes on the other side of the cloud, we've missed the trade. So what we know, what the cloud helps us is it predicts support and resistance areas, and it confirms trends. And so let's go back to CTL. So in this case, it's just breaking the cloud. That really gives us a lot of confidence. But we can also, look at the overall price action and begin to predict that we think it's going to break through the cloud. I think Cooper Tire maybe has not yet. So if it were to break it, it would give us more confidence in the trade. But we see this wave count, this big dramatic move, perfect retracement, and now, and also we see that it hit the 200 and bounced and reversed. That's a pretty good sign. And now we have this low, lower high, and we broke that low. So, there's no one indicator, no one measurement that tells us the trade is good or bad. It's the collection of all the analysis, of all the evidence that we let stack up. And in this case, we got a great wave pattern, really dramatic move down, perfect retracement, low, lower high, new low, under the 200, reversed off it. We got negative momentum. We believe it's going to break the cloud and it's going to be a good trade. So that's kind of the process walking through, Jeff. It's and everybody else. It's accumulating evidence, building a strong case for what's going to happen next, and no one particular piece of evidence or indicator gives the complete answer. Go for Sal. So go. Here's evidence when I talk about it. So big dramatic move down. No dispute about that, I don't think. So at some point we think that will retrace, and we can just use the Fibonacci measurement. We expect it to retrace up into this Fibonacci retracement zone, 38.2 to 61.8, these blue lines. We look for evidence that that retracement is beginning. And in the case of go, oops, pen working here, we've got it, right? We've got a series of very dramatic low, lower high, low, lower high, wow, right? And then something new happens here. High, higher low, new high. And it broke the cloud at the same time. Well, that's new, and we got positive momentum right here. So this retracement, the correction to the down move is underway. Got a high probability of getting into this zone. We would also watch the 200 and see if it failed there. But from here, from 519 up to 720, that is that's a $2 move on a $5 stock. That's 40–50% profit. So that's a trade that's actually worth taking. I like it. I'll make a note of that one. Thank you, Sal. I would check a few things out. I'm not a fundamental trader, but I want to go make sure there's no red flags on the company. That one's worth doing a little diligence on, in my opinion. So I'm glad you showed up, Sal. And I'm glad everybody else showed up too. That's a pretty good one. John, PRTY. Party City. Well, the party's over at Party City. It moves, but it doesn't move in impulsive and corrective kind of ways. I don't like this kind of chart. It doesn't do much. It's not one that's easy to predict. And when I can't really assign probability to a trade, I mean, it's heading down, it's broke the cloud. Where's it going? We have no idea where it's going because it doesn't really move in orderly, impulsive corrective fashion. So it's hard to predict. And for that reason, I wouldn't trade it. Bob wants to look at Qualcomm. I think I saw an article that said, yeah, Qualcomm chips are no longer not in the latest iPhones. It didn't seem to hurt the stock too much here. So here's the impulsive move, and it looks like a correction has started, but it's only one leg. We only have, 4 or 5 trading days down here. It has done that before, and that does not indicate the trend change. You got to get that pattern I'm looking for, a momentum shift with lower high, and low. I wouldn't take it long up here. I think it's a little long in the tooth. I wouldn't take it short. I don't think it's proven that it's going to head down yet. Worth watching. If you do get this pattern, and folks in my trading room, know what I'm looking for. This pretty clear indication of a trend change. When it's that, you could take an entry right about there, short, and it could be pretty good. And you got a pretty good target zone on it when and if it gets proven. And it would be something like down into here, down between 66 and about 59. But it's got to prove it first. Does that help, Bob? Costco. So showing early signs. I like this move up. Then another move down could be it. That could be it. Let's go check back in on our futures. Wow, S&P up and away. While we were looking at other things, that pattern that I told you about for the intraday trade actually happened. So here's the initial move right after the announcement up. It retraced right into the Fibonacci zone, and then look, the original trend resumed and actually got bigger. There it is. It happened. Wasn't huge. I don't think I would have got all excited about trying to take a day trade on that one. By the time we had an entry, not too bad. 29.30, 36, 6 points. That's not a bad day trade. Bob, what about a retracement or resumption of the upward trend? I think you're talking about Qualcomm. Could happen. It's an awfully mature trend, right? I try not to trace. I don't like to chase trends. I like to get in early on them, either early on a new trend or early in a correction. Once it's run, I don't like to chase it. Could it keep going? Sure, it could. Hard to predict targets on mature trends. If you look at like CTL, I've got a target I can predict, right? And if you look at CTB, here's one. What's the name of this one? CGNX. This is a good example. This is one I can predict. So we had this long trend, right? And then we had a perfect correction to it, and I can use Fibonacci extension lines to predict where this next move. So you see, big move, correction, down, 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 high, higher low, new high, broke the Ichimoku cloud, broke the 200. That's where we took our entry. We got a target, zone up above 72 bucks. I've set my target right at this prior high. Even if it fails at 69.53, that's going to be a marvelous trade. 53 to 69, that's $13 of profit on a $50 stock. And we're in profit. And by the way, our stop, this red line, is above our entry. So even if it fails now, we got a winner. small winner, and we think this one's off to the races. So that's what I'm looking for. It's a good one. That was pointed out by one of our trading room members, Jack. He does an awesome job at finding good trade candidates. Well, I showed you some trade ideas. This one, CGNX, by the way, still has good entries for anybody looking for long. That's a pretty good trade. We got an aggressive short on the Russell, looking pretty good. And we've got some high probability trades. One short trade on CenturyLink that looks really good, and another one on Cooper Tire and Rubber. The short trade looks good. So there's 4 trade ideas. So that's worth showing up for, hopefully. Al, S.J. Smuckers, we've traded that recently. You know, that may be getting ready to go again. That may be actually a good one to short. Look at this pattern here. Low, lower, high, low, lower, high. Heading down again. Found resistance at the cloud. This target may still be good. So S.J. Smucker, I'm going to make a note on that one. That may be another one to get back into. Cool. And that's a continuation of the original downtrend. Well, I know, again, we got several guests in here, and I sure appreciate you showing up and your questions and comments. If you like what we're doing here and you want to see the next good trades and you want to continue following along, we're here 4 days a week, Monday through Thursday for an hour in the mornings, looking for trades, managing the existing trades. We just took a look at some live ones. That's kind of what we do in the trading room, what we just went through, and then we find trades and we put them on, right? Finding great trades, it's sometimes it's like finding a needle in a haystack, right? There's a lot of symbols out there, but finding a really good high probability setup, it can be hard. And we found a good one here, gave you 4 trade ideas. And here's 3 things that I think are essential to remember when you're trading. You got to have a great trade setup. I've showed you mine. Mine aren't the only ones in the world that work, but they work well for me and for my customers. You need a high probability outcome. You need a great reward to risk ratio. You got to be able to manage risk. We got a very defined method for that. You got to manage the trade. Know when to take profit, know when to, when to hold them, when to fold them. You don't know when to get out. You got to know when to let it run. So, you guys, do you think those are important things? Having trade setups, risk management, trade management. Do you agree those are just essential elements of any profitable trading plan? Anybody in agreement with that? Or disagree? Yeah, Gimmo's in. All right. Anybody excited about some of the trade ideas I showed you? Maybe a little unsure how to proceed. The CenturyLink, I'm in that trade. I took that trade this morning in the trading room with my money. Cooper Tire, I'm going to take. IWM, maybe. We'll look at it again tomorrow. Maybe you feel like this guy here, I just gave a ton of information. You're like, whoa, that was kind of interesting, but I don't even know what to do with it. Hey, I'll take a couple minutes here and I'll just give you a special offer if you're interested, where you could participate in the trading room, in the pick service. You don't have to be in the trading room, by the way. Not your thing. The trading room, similar to this, is we're analyzing charts and finding good trades and then taking them. But you can just sign up for the text alerts and get them that way. Again, finding great trades is hard. Once you find them, you need a plan. You need great setups. You need risk management. You need trade management. And that's something we do every day, and I provide tools for that. Trading service is doing well. It's been a tough year. We're a little below our year-on-year average for profitability, but we're still doing good. So based on a $100,000 account size, we're at just at $4,800, almost $5,000 profit year to date. And the key to that is about managing risk and managing the trades, right? It's been kind of a challenging year, but our win rate is accelerating. We've made some changes. We've started using an artificial intelligence tool to help us qualify our trades and to help manage the trades. And we've seen the win rate accelerate. And so I'm expecting to close out the year, with a close to our annual running average results, which are about 25% per year for the account is our running average. So doing good. So if you're interested in joining the Pick Service Trading Room, you get great trade setups, you get risk management, trade management, you get up to 10 hours of detailed trade consultation per month in the trading room, in the live chats we do. You get a one-on-one consultation with me, you get ongoing education, and of course, winning trades. That's what it's all about. That's what we're doing. For folks in the room today, visitors, you can get a special offer here, and you can come give it a try. Give it a try for 30 days, $37. So that's a pretty, it's pretty low price to come give it a try. Definitely want people to be able to come try it out, see if it's a good fit. It's a good fit for most people. It's not for everyone, but $37. It's just over $1 a day. Come give it a try. It's $97 a month after that, which is a discount off the list rate, and there's a 100% money back guarantee. You come, go sign up at that link I just posted. Take the trial 30 days. During that time, if you go, no, not really my thing, not a good fit, you just let us know, send us a quick email, 100% refund, no questions asked, no hard feelings. After the 30 days, you go, yeah, that's awesome, and we're making money, and it's a good experience, then you stay, and that's all good. Here's everything you get. You get a watch list of potential trades that look good. We're waiting for some final confirmation. I publish those on a spreadsheet posted in the website. You get alerts, email, text message when I'm getting into a new trade. You get the exact details, the entry, the stop, the target. The trades can be traded with shares or with options. I like options, so I provide the contract that I'm using, but you can trade them shares, options, either way. You get alerts, email, text message. When I make a change, move a stop, take profit, close the trade. You get access to the live trading room. It's an hour. We've made it an hour now. You can attend if you like. It's not required. We record it, and we do like a 2-minute recap each day. So if you just want to go, what they do in the trading room, you go watch the recap. They're real short. Weekly live chat in the evenings, Wednesdays, 6 p.m. We're doing it tonight. So if you sign up, you can join us tonight, and we'll be recapping the trades and looking at new ones. You get a one-on-one consultation with me. Optional if you like. Risk management, option trading tools, and training are available when you sign up. You get access to them. And you get ongoing support and training. So it's a pretty good package. And again, I'll go back to that. It's $37 for 30 days to give it a try. So it's pretty good deal. I'll post that link again. And Lizak, hey, you're welcome. And there's a testimonial from Al saying it's great. He's very pleased, been here 9 months. Yeah, it's good to have you here, Al. We appreciate you. All right. Hey, if anybody's got any questions, I'm happy to hang out and field them. Otherwise, hey, I thank you for showing up. Sure appreciate it. And we'll do it again when there's other announcements. Once in a while, we do a big scanning session on Saturday. So if you're interested in that, where we go use some techniques I have for scanning to try and find, uncover some trade ideas. So I think we're going to be doing that not this weekend, but next weekend. So that's something to look for. All right. Hey, if there's any questions, I'll hang out here. I'm going to go on mute. Going to have a little coffee. So the presentation's over. The reaction to the FOMC was kind of flat. Not much happened there. But if you're interested in the offer, you got questions about it, type them in there, and I'll answer. I'll be happy to answer them. But thanks again for showing up. Appreciate it, and we'll catch you down the road at some point. Hey, there's a testimonial from Jack too. Hey, thanks very much, Jack. Oh, thank you very much, Miles. He says, I'm good and I'm honest. Well, thank you.